live.tv.
Hey, what is going on, everybody? This is Tyler Carlston here with the Mortgage Accelerated podcast. I'm super excited to have on Nathan Knottingham from the Knowledge Coop. How are you doing, Nathan?
I'm well. Thank you so much for having me on your show today.
My pleasure. Thank you for coming on. So, Nathan, if the people who are tuning in don't know who you are or what you do, why don't you go ahead and give us a very quick introduction of yourself?
Yeah, so Knowledge Coop is a training platform, training company, and my job is the vice president of training development here at the Knowledge Coop. So I do a lot of video production, a lot of continuing education, pre-licensing, keynotes, presentations, annual compliance training topics, and production. So we write, develop, produce a lot of that training, and that is my core of what I do. So that's it.
Awesome. So I also understand that you have a little show on the side. I think it's called The Lowdown. Is that correct? Could you tell me a little bit more about that?
Yeah, for sure. So the Knowledge Coop, really what we're focusing on is trying to produce content and training that the industry finds better, right? So when we say training in the mortgage industry, a lot of times what people hear is a four-letter word that they would get their mouth washed out with soap when they were small. And so instead, what we're trying to do is create something that people laugh at, right? So training is impactful if there's an emotion that's tied to it. So when an emotion is tied to training, that lately has been, if it's boring is actually an emotion, right? Boring causes you to feel tired, sleepy, sad, upset, all sorts of things like that. And we don't want that to happen. So we just try to say, all right, what if we were able to create a funny emotion? What if we were able to get people to laugh about things? And if they could laugh, then maybe they'll pay attention and maybe they won't dread their training. So what we do is we create a lot of training, a lot of material, but that's not really always forward facing because that's a lot of times behind a paywall. It's either in the two verticals of our company is in a training and development and this video work and going out live and speaking. And the other vertical is the Coop, which is a intranet platform that delivers LMS, compliance management. It is an internal system for companies to use to keep themselves as a community in social learning. So a lot of our training material is actually behind a paywall. And so we said, well, what can we do that exemplifies one, who we are, and two, gives us the right reasoning to make more funny material that will then also be put into our training. And that's what the Lowdown turned into. So it ends up being about a minute to a minute and a half weekly video where it just talks about a topic or it brings just a funny sketch. And so this week's was all about RESPA, dodging RESPA violations like dodgeball. And so, yeah, we just come up with a crazy idea and try to make something that helps emphasize mortgage training.
Yeah, I mean, there's definitely a lot of mortgage training out there that, like you had mentioned, it's very dreadful to go through, but definitely trying to implement laughter and joy into any type of learning, I think, is always a good and positive thing.
Yeah, absolutely. Whenever you want somebody to learn something or think about it, you have to produce it or present it in such a way that makes people go, wait, that's not really how I thought of that before, which gets them out of the commonality thought of it's only this way. And if you get anybody to shake out and go, oh gosh, I didn't think about it that way, then they're opening their mind to new ideas and new aspects and how to apply that in their life. So that's what we really try to emphasize in our training and our video creation. So we do create a lot of video, and we do it because we think the market deserves better. The ethos of the Knowledge Coop is to be the best friend in the mortgage industry. That's what we do. And so when we are the best friend, the best friend doesn't just say yes, right? That's just a friend. A best friend says, hey, this may not be the way you want to go. Here's a warning sign. Here's something you should do. A best friend says, you did an amazing job. But a best friend also says, you really sucked at that. Let's fix it. Here's how you need to go about it. And so we want to be the best friend in the industry, which is to celebrate things that are worth celebrating and to fix and align things that need to be changed.
That's awesome, man. So why don't we dive back into what was your life like before the Knowledge Coop? Why don't you just give us a little more of your upbringing? What got you into the industry? Just a little bit more about your past.
Absolutely. So I think one thing people need to know is that this is a pop version of Ron Swanson from Parks and Rec, who is my television spirit animal. Like, I want to be like Ron Swanson. He's an amazing character. But no, in seriousness, I grew up in Oregon, so Salem, Oregon specifically, and I'm a fifth generation Oregonian. My great grandfather homesteaded here, and that's just my great great grandfather, and it's just been where we've been. And so I actually got into the mortgage industry out of Starbucks in 2007. So my timing is impeccable when it comes to changing careers. I grew up at Starbucks, and I had a regular customer who said, you want to buy a house? I'm like, well, sure I do. And he actually just was ready. He had unfortunately gotten a separation from his marriage, and he had needed to move. And so he sold my wife and I his house for under market value at the time in 2006. And I went, wow, this is really cool. This is easy. And I found my loan officer as one of my regular customers at Starbucks. And then he's like, hey, you should come work for our company. So I became a loan officer in Oregon for a private brokerage and started cutting my teeth May 2007. So right about when the bubble started popping is when I entered the industry. And that's how I met Ken Perry, though, the owner of the Knowledge Coop, which was formerly known as Broker Knowledge Group. He was brought down to teach ethics and how to write loans compliantly, even in that time before Dodd-Frank and all the outfall or the fallout from 2007 and the crash. And so he and I developed a relationship, and I loved what he did. And so what I did to market myself as a brand new loan officer when the world had been super hot in mortgages and people were just making lots of money, I was trying to make my name in the industry. And so I would take the training that I got from Ken. I said, hey man, I'm going to rework this. I'm going to present it. And I would host lunch and learns to anybody who'd come. And I would just put it out to the entire industry, fellow loan officers, realtors, everybody in escrow and title and lawyers. I just put it out there. And so I'd go to chamber events and say, I'm hosting a lunch and learn, bring a lunch. Like, let's have a conversation. And I would literally reteach what Ken had just taught us like the week or two ahead of time. And so Ken and I became friends. I love speaking. I love teaching. Life happens. I had a child and my wife stopped working. I was like, I need to make some more money. So I took a salary job and I left the industry, but Ken and I stayed in connection. And as about 10 years later, I was running a chamber of commerce in McMinnville, Oregon. And he called me out of the blue and said, man, the world's changed. We'd have lunch. We'd talk like once or twice a year, so just keep in touch. And he called me out of the blue and said, everything's changed. I hate online training. I don't want to get into it, but we have to, and we need to do something different. We can't just read over PowerPoints and present that as new information. That's not what I do. That's not what Ken is known for. He's a very engaging public speaker, hosts a very amazing live class. He's like, how do we do this? Help me out. So I joined up about 3 years ago, here up in Camas, Washington. And from that point, that's how that's the escalation and kind of the flow of how I got here.
That's awesome, man. That's quite the journey for sure. I mean, getting right in and right before the bubble burst, that's pretty cool. So let's dive into something you had brought up about you had taken your job at a private brokerage. Obviously, that's a movement that's gaining a ton of traction. Market share for brokers is going through the roof. Anthony Casa, the chairman of AIM, is the head of that movement. What's your whole opinion on the broker world right now?
Well, let's just clarify that you asked my opinion. So this is definitely my opinion, and and I am not of legal counsel. Therefore, I have no other insight like that. This is just my thought. Look, I actually love the broker model, but I love the model that is lending, that allows us as licensed professionals to give customers all the choices, all the options. I didn't know any better as a broker. I didn't know that there were other channels. I thought that's what you did. But that's because the world was almost simpler, right? I'd show up to work. I'd have a loan file. I'd run that loan file. I'd see where it fit. I'd run DU. And I'd be like, all right, well, it's going to have to go either Fannie Mae conventional, or it's going to have to go FHA or VA, or I'd even did some USDAs, right? I didn't have a lot of options because the market had just imploded so much. So then I would look, and twice a day we'd get sent rate sheets from all the lender lines that we were assigned to, and I would just price my loans that way and run on a YSP. And I knew what I had to split with my house based on my production, and I'd price out my loans. I'd say, okay, well, I'm willing to give this borrower this much of a rate because I know my yield spread premium coming back, and my pay would be this after I split it. And I wanted to do more loans and help more people, so I was always pricing as low as I could. It didn't make me a lot of money, but I was good. I was just fine. But I see where that issue comes into play ethically, right? That's just a bad way to do it, because if I was unethical and I just wanted to make as much money as I could, I would have priced loans differently and just sold it really hard. So part of me, when all the change happened and I saw everybody revert and kind of building walls is kind of what happened to protect us. Is when they left the brokerages and they kind of backed in, they merged and they built these non-depository bank systems and mini core, et cetera. I can see that as being a solid response to a very scary time in our financial history. That just, how do we keep our businesses afloat? Lots of companies went under because they weren't willing to or didn't have the response to do that. The reemergence of the brokers is actually really healthy. Dave Stephen, I'm blanking on his name, the former chairman of NBA, and I hate that I blanked those names. David, it's going to come to me. Do you remember what it is? I'd have to look at LinkedIn, but yeah, anyway, he did just a phenomenal, I think it was 2 weeks ago, he did a phenomenal video response to your question. Like, what is the deal about the return of the broker and how that fits in the non-depository lender capture, the mini core, the pure broker? A good friend up here in the Northwest is Andy Harris. I mean, he's all broker all the time. And his position, though, David's position really was, look, us all being in the same business and competing with one another is driving us to a higher standard of expectation and excellence. And that's what we need to do. And that's what will serve the borrower better. So my opinion, that's a long-winded way to say that I'm really glad to see the brokers returning. I'm really scared about the brokers getting out of their mortgage banking side, their non-depository bank side. If they retreated to a non-depository bank and they worked in a big company, and now they're like, oh, I'm going to be a broker, I'm just going to work for myself, and they start doing things non-compliantly because they, in their previous role, they had an entirely large company that had all the compliance department for them and helped them stay compliant with disclosures, with documentation, with conversations, with marketing. There was a stopgap right there, right? There's a backstop that helped keep them safe. Now they go open their own shop. They're 1, 2, 3 people, and they're like, woohoo, let's go crazy. That's what scares me the most about the broker returning, is that it's like, all right, I'm a broker. I don't have to worry about MCRs. I don't have to worry about RESPA violations. I don't have to worry about MSAs. I can just go do whatever I want. Nobody's going to care. I'm here to tell you the states are watching closely. They know the numbers just as well as the market knows the numbers. I have the Knowledge Coop is one of the only trainers I'm aware of that actually gets invited and goes and speaks to ARMOR, the American Association of Residential Mortgage Regulators. Just a few weeks ago, I was speaking on stage talking about BSA AML and regulation with examiners, state examiners in the room, and industry. We all get together in this conference, and they're watching. They know brokers are coming back, and they're going to be doing examinations and going to be doing drop-in investigations, examinations, because they want to make sure ultimately that the customer and the community that these licensed individuals and entities are working in are doing it right, and they're taking care of the borrower.
Yeah, I agree with you there. I mean, I feel that, like you had mentioned, they come from all this babying compliance departments and the big companies to where there's nobody breathing down, hey, you cannot do this. And yeah. I feel that the way the market's shifting, a lot of these big banks aren't probably going to be liking that a lot of the market share is going towards brokers. And even though there's only state regulators right now, I feel that there might even be a push more towards getting more aggressive to making sure all the brokers are complying on a federal level here shortly, possibly, as to where they're going to be looking for a lot of ways to make sure that that market share doesn't grow. I mean, that's just my little opinion. What's your thoughts on that?
I disagree. I don't think the non-depository banks are that worried about the market share growing. I think what we're seeing, and this is a great conversation, and I'm speaking off the cuff because I haven't thought deeply about this at all. But I think what we're seeing is some of the non-depository banks are going to be excited to see the market share grow, because it allows them to compete with another aspect of the market, not just more of the same, right? So a fruit basket is boring if all it is apples. A fruit basket's actually exciting if I get apples, oranges, bananas, and grapes, right? So I have something to pull from. I think that's where you're going to see a lot more of the marketing, the impact, both in recruiting and what services and opportunities are provided to the borrower. So I don't I don't know if I agree that that we would see non-depository lenders like the large national lenders trying to fight or slow down the broker growth. For some of them, that is a channel where they will branch off and pull their retail and their wholesale divisions, and they'll run basically two different entities under the same umbrella, and they're going to try to grow and win on both sides. Again, there's some great articles out now recently that say that may not be the best way forward, as we watch companies like UWM kind of going all into the broker side, and then other companies like, well, I can't even think, Guild, going all into the retail side. So you kind of have two channels there, and those that are trying to play both sides of the field may not be as successful. We won't know. Who will know until it's actually done and we get more data.
Yeah, exactly. But I mean, I really liked what you said a few minutes ago about really just competition is a naturally good thing. So with broker market share growing, it's just like with football starting up and just everybody trying to, the 53-man rosters have to be finalized here shortly. And all those competitions, whether it's quarterback battles, whatever it may be, any type of competition at the end of the day is going to make a better consumer experience, I believe, because if you're having to fight more for your business and you're competing with more people, it's only going to enhance the customer experience, I believe. So I 100% agree with you at that point that you made.
Yeah, we can only hope so. And I see you're a Green Bay Packer fan, and that's, I believe that's who's over your right shoulder there. That's a good analogy, but the competition, as long as it is done ethically. And so, like, for example, I don't know that people understand this, but in the continuing education field, I have a competition too, right? And in fact, what I have is a very unique and specific market. You and I were just talking a few minutes ago, and you're working on your license work, right? So you've taken a lot of training, and you took from somebody who was actually my direct competitor, but we trust and admire what they do, and we drive each other to get better. And I love that. Now, in that same breath, there are competitors in my market that we don't appreciate as much. We think they're trying to drive the market the other way, to the bottom dollar, to the lowest common. It drives me crazy because they're not trying to get better. But that's what the market does. That's what competition does. And those that want to compete at the highest level, those that want to be the NBA champions, the NFL champions, they want to be the top of their league. You're going to watch them float to the top by hard work. They're just going to work every single day. It's Friday. It's 1 o'clock here. I've got another 5 to 6 hours of work to put in before the weekend. And it's a long weekend. I'll be at work on Monday just from my home this week because we are going to get ourselves a top. That's what I see happening in the mortgage market as well. Those that want to win are going to find the ways to go up. I think Housing Wire just today reported in the AM edition that mortgage companies are making more money than they did the last 3 years ago, right? So whatever margin compression was happening last year, they moved, they pivoted, they transitioned. I think part of that was actually losing and letting go of people who have now gone into brokers and built their own. So there's been this flexing and leveling out, which is going to keep going. But I think everybody's going to start winning from that because compression has released, and now people are making more money on the revenue that's coming in from the loan products. Who knows? There's a lot more to it. Many more smarter women and men than I can speak to that. That's just my opinion.
Cool, man. Yeah, that's interesting for sure. So, Nathan, that looks like that is all the time that we have today. I do appreciate you coming on. Is there anything you want to say before you head off?
No, I just appreciate the time, and anybody watching this and wanting any follow up, I'd love to talk. I appreciate that. And I'll be shooting you over a link. We definitely, as a thank you for having us on, have a small discount for anybody who needs their continuing education this year. And I'll shoot you over that code and a link for you so you can post it on this post.
No problem. Thank you again, Nathan. Thank you, everybody, for tuning in. We will be back next Friday on the next episode of the Mortgage Accelerated Podcast.